Hey, I'm Tom. Welcome back to the channel. Beside you here, I have 15 rare earth minerals that are optionable stocks. That means these, out of all the rare earth mineral stocks that are out there, these are the ones that trade options on them. But wait, we're going to need to chop this list down quite a bit, and I'll share that with you in just a moment. As far as this 15, you could snapshot this right off your screen, or if you pause the video, you can grab all 15 of these and we can go from there. But by the time I get done, you're probably going to want just a few. Take a look at this. What I've done here is I took these 15 and I ranked them by 30-day average stock volume. Now, the stock volume has been increasing quite a bit. But what I'm really looking for, if I want to be an option investor, not a trader, but an option investor in rare earth, then I want to be looking at rare earth that trades 10 million shares or more per day. That takes care of most of the list because now I'm down to the top 5. Energy fuels, critical metals, United States antimony, USA rare earth, and Neocorp. All 5 of these trade over 10 million shares a day. Let's continue with the chop. So I did a high-low ranking for 2025. You know what this does? This drops the list to just 3 stocks because these 3 are the only ones that I have any kind of long-term pattern recognition from. And that means energy fuels, Neocorp, and United States antimony. From there, let's take a look at each. First of all, energy fuels, symbol UUUU. All right. This one, over the course of really the last 6 months, we're seeing lows on this at around $3.50 a share. We're seeing highs that came in above 26. Now, recently, in the last week or so, we've seen pullbacks that have taken this from the high 20s down to below 20. And so, in this case, what I want to do is I'm looking at this thinking, where are the buy areas? This is still bullish from the momentum it's gotten. And it might be a great area to get involved in. If we just take the distance between the 38% correction and the high we've had, we can take those two and come up with a rough estimate of where that next move may go. Target $34. Now, what I'm doing is I'm targeting these into more than a year from now. This is not next week. This is not next month. I want to give myself plenty of time to be right. I want to be an option investor. And with UUUU, I can look at a target price of UUUU. And looking at the 2027 call, what I'm looking at here, let's back up for a second. I want to look at one more thing here. If you take a look at where we are now, let's call this 20 to 34. That's a $14 move. The 20 call options are trading, let's call it 10. If I expect this to go to 34, that means this 10, all right, this 20 call becomes 14. So I'm going to risk $10 to make potentially $14. I need UUU to go up to 30 by next year just to break even on the stock. Keep that in mind. Our next candidate is Neocorp Developments. Neocorp Developments had a low of around $2 a share, and it's gone as high as about 12.5 before this week dropping back down to 8. Now, it's interesting that it moved up and moved down inside of the last 30 days. So if we take a look at that 38% retracement, we're sitting pretty much right on top of it now. So going and look at the options for January 15th, 2027. That's more than a year away from where we are right now. The 7.5 calls are $4.60. Let's say we got them for $5. All right. For $5, if I come back again and I look at where my target is, if I've got an $8 stock and over the course of the next year or so, I'm targeting it to go up $16, that's an $8 move from 8 to 16. What are the options going to cost me? They're going to cost me $5. Again, I'm paying $5 for a maximum reward based on my target of 8. And again, we're talking about something where I could maybe get a 50%, 60% return on this particular trade, 40% actually off of the $5 move, right? If I looked at the $10 calls, well, they're going to cost me about $4. And for, again, 10 to go to 16, that means the $4 strike, that $10 strike could go to 16. If I pay $4 for it, then the most I can make is 6. So far, I see more risk and I see less reward. Let's take a look at our final one, which is UAMY, UAMY. That's United States Antimony. Low was below $2. High got up very close to 20. Pullback took us down to $11.19. We see a $24 move. So we're going to go from 11 to 24. We're talking about a 13-point move to get us up to a high of 24. 13 points. Hang on to that number for a moment. Take a look at what the $10 calls are going for. The $10 calls are going for about $6.15. Let's call it $6.25. All right. So what we're looking at again is if 10 becomes 24, that means that we get a $14 move. Even if we paid $7 for these calls, they have a potential double on them if we hit the target that we're looking at of 24 by January of 2027. I like UAMY, UAMY, the best. Not because of the double, although that's very nice, but more importantly, because the slippage, the distance between the bid and the offer, seems to be the closest together. It gives us very good potential opportunity of getting in, but not only getting in, but getting out when it comes time to get out of this trade. So, rare earths are here to stay, but in order for us to stay and go long term, we got to think about what we're paying for these trades. Okay, they're all the talk right now, but if they continue to move higher as option traders, if we're not going to buy the stock, if we're going to look at long term equity anticipations, which are leap options, those year 2027 or higher, you got to look at the slippage, distance between the bids and the offers on each of these and see if they fit our tolerance. Again, no matter how good something looks, sometimes it might just be best to buy the stock. All right. Hope you found this educational. If you did, like, share, and subscribe. Thanks for joining me. See you on the next one.